Hey guys, welcome back to my YouTube channel. So today's video is going to be the weekly podcast that I usually do. It's basically, for those of you watching for the first time, it's basically a rundown of how the markets had been in the last week, and sort of giving you an idea of all the major market news and combining it into this one small video, and potentially things that you could look forward to in the next week and keep an eye out for. So let's begin. Let's start off at the S&P index. So it was a good week for all major indices. We ended the week around 3% gain. Let's check. Yeah, about 3% gains on the week, or more from the peak, so roughly about 3%. Oops. So yeah, it was a good week for indices, and mainly driven by and because of Jerome Powell's comments. So for those of you that don't know who Jerome Powell is basically the Fed chair. So he decided to keep interest rates where they were and not to hike rates, which was already priced into the market. But the main thing to look out for in that meeting was about whether or not he is dovish or he's still quite hawkish in terms of the outlook of how many rate hikes he's going to do this year, if any at all. Now it's the probability of him doing any, or not at all any, is very, very high. So that's something that's obviously been a relief for the markets, and they've obviously then rallied at the back of it. I personally do not see that as a positive sign, just like the rest of the market is. If you watch one of my previous videos, I've mentioned about what I'm shorting right now, and the S&P and the major indices being one of them. I'll leave the description, the video link in the description box below, and hopefully it should pop up on the right hand corner of this video. But basically, just to give you a bit of an understanding of why I think like that, is because for the Fed to pause on the tightening cycle is not a bullish sign for the economy. Because if the economy was doing great, as he says in his comments, then why would he be putting a tightening? Why would he pause the tightening cycle? The idea would be for him to keep jacking up rates to keep up to the economy. But now, obviously, the way to think about it is, look, one, he got too ahead of himself. He hiked way too quickly, so he wants to take a pause, which is a fair point. So in which case, it could say, yeah, the market's still fairly bullish. Or secondly, he's pausing because he knows that he doesn't expect the economy to be doing well in the nearby future, even though obviously he will not say that in his guidance. So that's why he's stopping the rate hike, allowing the economy to stimulate a bit more, for then to him have the opportunity, if need be, then later to maybe hike, or if not, then be cutting rates. And this is, in fact, there's been 2 times where there has been an actual pause and followed by further rate increases. But apart from that, every time there's a pause, it usually always leads to a cut afterwards, which basically means and indicates to you and should explain to you that that is not really a good sign to look at. That doesn't mean the market won't hit new highs this week, next week, whatever it may be. But the idea is just to make sure you understand those differences. So don't just go on the back of those comments, or no rate hike, and just go buy the market blindly. Make sure you use those sort of analogies and sort of understand the reasoning behind why people do things. Again, people say things and do things a different way, right? They can easily say something that's bullish, but then actually act and do things with their actions that is bearish. So just be careful of that. But anyway, yeah, so it was a good week for the markets. They obviously rallied on the back of it. So that was the major indices sort of news in the US. Obviously we had a little bit on sort of Donald Trump and the government shutdown. Obviously the government's reinstated at the moment. The shutdown's being stopped for not a very long period of time. I believe that they will be doing another sort of discussion in the coming weeks. To then they will decide whether or not they will carry on, whether they'll do a shutdown again, or actually see if he gets funding for the war. And obviously one other news has been going on for 2 years, and that's Brexit, which is obviously boring a lot of people now, and rightly so. But so a quick rundown is that obviously UK were expected or meant to leave the European Union by, I think, March 29th, and now the problem has been that they are not able to reach a deal by that period. Parliament is rejecting everything. They do not want a no deal, but then they don't want to accept the deal. So it's a problem for Theresa May, and So what's happening is that they're deciding or thinking that they will be extending the deadline to see what, to allow themselves more opportunity to come up with a new deal. And obviously on the back of that, the pound has strengthened, because obviously right now they have no clue what's going on, an extension on Brexit. So there's no Brexit at the moment, so pound has had a bit of a relief this week. Another thing that I really wanted to sort of touch on was the fact that in my opinion, Brexit is more harmful to the EU than it is to the UK. And the reason being is EU is having a massive problem in the complete Eurozone. Italy's in recession, Spain is off the rails, Germany is going into it has entered an industrial recession, which basically means they're manufacturing. They're putting in two results for the manufacturing index, both negative growth, declining growth. So that's by definition entering into a recession. And so they are in a tough spot. So for UK to stay within the EU is more beneficial for the EU than it is for the UK. And that's something Theresa May, I don't think, really understands, or she's not using that to her negotiation power, and she could end up getting a much better deal. And another thing that she can easily just say to them is, look, if you don't give me the deal that I want, we'll do a no deal. And EU would definitely not agree to a no deal because of the fact that they will not get the divorce bill, whatever the amount is. I forgot, it's in the billions, like 20 billion, 30 billion, whatever it may be. But they need that money, and they need that money to be able to fund the downturn that they have in the EU. So that will be the sort of bailout package money where they will keep to use that as well. So there is, in my opinion, it's so much more easier for the UK to get the deal that they want, and they're not playing it smart enough, or Theresa May isn't using her powers properly, because EU, obviously, you can just say to them straight away, look, you give me the deal I want, or there's no Brexit. No Brexit is just worse for them because they will not get the divorce bill, and obviously that's something that they do not want to forego at all. So that is something to think about. I think if there are traders that are listening to this that are sort of slightly experienced guys, I think you'll probably understand what I'm getting at. But I'm not going to make it explicit in this video, only because of the fact that I want it to play out a bit more, and obviously, I don't like to expose my sort of positions before I've gotten into them. But obviously once I do, then I can go and talk through them. But yeah, so overall the market this week has been great. For the indices, stocks have had a bit more of a further rally. UK FTSE 100, FTSE 250 has also done well. So yeah, Brexit has been delayed. Powell said we're pausing the tightening cycle, so everyone seems to be a little bit happy at the moment. And usually we have a bit of a risk-off moment during February, and we haven't had that yet. Could it be next week to be the start of it? Possibly, but at the moment we haven't had that. So that's all, a quick rundown of the market. Hope you enjoyed this video. Make sure you subscribe, like and comment, and let me know what other videos you want to see next. Talk to you guys later.